Good morning and welcome to this session of the virtual coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. Yesterday, we began the topic on prospectus and allotment of securities. We started off with the topic and we sort of understood what is a prospectus, right? And then we went on to Section 26, which deals with the rules relating to prospectus. We saw that. We had a question from Mr. Prabhas Jain. At that time I said I will just check up and get back. In fact, Prabhas Jain was good enough to actually post the Barak. And he's absolutely correct. That's why I have changed it. See what happens. In our eagerness to simplify, sometimes we miss out. And it is correct. See, the expert should be a person who is not currently, at the time when the prospectus is being delivered for registration, at that point in time, and has not, that means past, he has not been interested. So past is also covered. See, a person who has been engaged or interested in the formation, promotion, management of the company. Formation means promoter, the guy who incorporated the company. Promotion, people mentioned as promoters in the prospectus. Okay. Management, again here you should be very careful. All employees are not management, only key managerial personnel, managing director, whole-time director, employees who have been specifically designated as KMP. So that person should not be engaged or interested currently and also in the past. So this wording is there. I have now corrected the slide for you so that you wouldn't have any doubt. Means if Mr. A was a director of the company, at the time of, he is also, let us say, an engineer, chartered engineer. He was a director of the company, but then he sort of resigned. At the time when the prospectus is issued, he is not currently, still, he cannot be an expert giving his expert opinion or consent. Okay, so very good. Thank you, Mr. Prabhas, for that thing. I'm not able to get the questions in my query pad. I seriously don't know what the problem is. So you might find that I'm not answering your questions until I troubleshoot this and find out what is the problem. Could be something to do with connection. I'm not really aware. I don't think it's a connection issue. Check up. Tech support also might look into this because I'm doing my best to. I'm connected and I'm there. But the queries are not coming into my query pad. Anyway, we saw the other topic, like what are the issues and all that. And now we move on to the types of prospectus. Yesterday we saw two types. Shelf prospectus and red herring prospectus, right? Shelf prospectus and red herring prospectus. And I think you have understood it well. Okay. You also know what is book building now. Book building happens when the company does not, have an idea about what price they should charge. There's a dilemma. That is why we say price discovery process. Now, so in any market, demand and supply. So supply is the company by issuing the shares. The company is creating supply of the share. But demand is going to come from the market. And who decides the pulse of the market is these people called QIBs and HNIs. Qualified institutional buyers and high net worth individuals. Friends, any and every person in the IPO game has to be registered with SEBI. Right? For example, merchant bankers have to be registered with SEBI. Brokers have to be registered with SEBI. Underwriters have to be registered with SEBI. QIBs and HNIs also have to be registered with SEBI. If they are not registered, they will not get the privilege of HNI QIB. What is that privilege? Whenever this company is coming out with an IPO, they will discreetly send this red herring prospectus. Okay. Now suppose somebody is asking you, hey, what is a red herring prospectus, man? The definition is very simple. A prospectus which does not include complete particulars of the quantum or price of the securities included therein. That's all. It is complete in all respects. Otherwise, it satisfies the conditions prescribed. The contents are clearly as per the format given. But the price and quantity, quantum is quantity, number of shares issued is not given. This red herring prospectus is circulated, usually sent to QIBs and HNIs. But today what the current practice is, they do not send it only to QIBs and HNIs. Possibly they discreetly send a personal private mailer, which will not come under this category, to them. They may do that, they may not do that. Today what they do is, they publish the red herring prospectus directly, so that everybody, see, they give it openly. Both the retail investors is like Aam Aadmis like me, who put small share, number of shares applied is very less, comparatively 1 lakh, 2 lakh, etc. QIBs and HNIs will go in crores. So both they publish it, except that the red herring prospectus nowadays, they actually give the number of shares also, but they don't give they give a price band. They don't fix the price. They fix the price band. Also, that's how it's happening. But originally the concept is, it will be blank, and they will send it to the QIBs and HNIs. Now the QIBs and HNIs will submit bids. So the red herring prospectus will be filed with the registrar 3 days prior to the opening of the subscription list. The red herring prospectus shall carry the same obligations as are applicable to a prospectus. Only thing is, it won't contain the price. It might have a price band. Now the people will start applying, which is a bid. Okay, that is called bidding. And this bids will, in the bid, even when if you are a retail investor applying on a red herring prospectus, within the price band, you have to apply. Suppose A Limited is coming out to the public issue, they might give you a price band because they don't know where to hit. So they will say 250 to 450, 250 to 450. Now, when somebody was asking, when did this book building process start? So I think it was 97, 98, around that time. Because some of the early public issues, I remember very well, was Maruti Udyog Limited. Maruti Udyog Limited, you are not going to believe it. The price was something like 35 rupees or 40 rupees, 50 rupees. I think the price band was like that. When the first issue, that was the range at which Maruti Udyog Limited, I don't know. And then, of course, you know what the price is now, Maruti Udyog. So when at that time for the IPO, they gave a price band like this. I foolishly applied at the lower end of the price band. And so the company was extremely oversubscribed and at the higher end of the price band. So they did not allot shares to those people who submitted lower. So they allotted it at the higher end price. I lost that. I couldn't buy Maruti Udyog at the time of IPO. Later I bought it at 900 rupees, but that was late. 2009, like that, I bought it at a price. But what I'm trying to tell you is, the price band gives an idea of what is the price. Okay. Seriously, not aware why my query pad is not working, because then some of you will get angry because I'm not answering your queries. Please do not think I'm not answering intentionally. My query pad is not working. Give me 2 minutes. I will try to log out and I will come back again. Give me 2 minutes. I will try to log out and come back again, so that maybe that could be a problem. Two minutes. Hey, still I'm not getting queries here. Something, I don't know. I don't think it's my internet problem. Oh shit, I'm going blind here. Your queries are not coming to me. The best promise I can do is, I will download the queries and I them. Right now, I will go through the content. Okay. The internet problem is there in my side. I'm using a mobile tethering. I'm tethering my mobile. So again, you might find that my connection is also a little weak. Okay, you put your query, because even if you put a query there, I cannot see it. I don't know what's happening. Let us see during the break, we will try to correct it. I don't know what's happening because connection is there on my mobile. I don't know. Right. So I just going through the red herring prospectus again because it's a slightly different concept. Somebody was asking what was it introduced? I think around 98 it came. They introduced book building as the concept. Book building around that time, 93, 90. I think one of the well-known public issues in using book building was Maruti Udyog. I remember that because before that, when the liberalized SEBI came, 92 May SEBI came, and then pricing was free pricing came, which meant the company could decide at what price they will go for the public issue. The premium was decided by the company. That came with SEBI. SEBI did not interfere, unlike the CCI. But then companies made huge mistakes. They undervalued. For example, Videsh Chanchar Nigam Limited undervalued itself. Huge undervaluations were there. This undervaluation got corrected when the market opened. So when the share got listed and started trading, suddenly the price went up beyond the IPO price. Again, supply demand issues. These were shares that were looked forward. At the time we had very few shares to buy, and this was Pakka BSNL was a public sector undertaking privatization. It was huge in demand, so the price shot up like anything. Same thing happened with Maruti also. Okay, so almost everybody came at that time. They undervalued themselves. Maybe I'm wrong about Maruti. It was maybe not 25, maybe it was 250. But the point I'm making is they undervalued themselves. That is when we realized that book building should come. Book building was already there in America and Europe. So that concept was introduced in India. Initially, it had a lot of teething trouble. Then now it's very strong. So very strong. Also today, valuation is becoming better in India. So companies are also able to understand at what value. Even if you notice, LIC came out with a price band. Life Insurance Corporation came out with a price band. So then they went for a single price. Right? Once we know what the trend is, where the pricing is, then the company will again publish the fresh prospectus, right? Giving the price and the quantity. If there is any change between the two, see, when I issued the RHP, then my financial position could be one way. There could be changes between the time of issuing the RHP and then actual prospectus. So any changes should be clearly highlighted as variations in the final prospectus that we are issuing, right? I feel bad that, the queries are not there because the queries gave me an idea as to what the trend is and all that. I'm seriously not able to. Let me do one thing because I know this is unconventional, but let me do it anyway and see if it works. If it works, then I have a chance. Not getting the query. See, you can see the screen now. This is my screen. Sir, queries are not coming, sir. Yeah, Ram. Oh. Okay. Got it. Okay, sir. Okay. No problem. Got it. See, simple solutions. Good show. Let's see. How many people are already complaining about your what happened? Give me 1 minute. No, thank you, Ram, for that support. I was thinking this will be a evening batch would be, but wow. Thank you. I got about connected. Very few questions are there. I thought many of you by now start complaining about internet, start complaining about my voice and all that. Nothing has happened here. Anyway, inshallah, hopefully nothing should go. If everything is fine, just somebody, one of you put an okay sign for me. Okay, also okay. My son was actually correcting me yesterday night. He said, you have become old man. Everybody is using OKK now. Why are you making a big fuss about OKK? That is similar to OK, like that. I got corrected. Thank you. I have learned something. From now on, I will also start using OKK. I don't know whether I can. Okay, how the company will set the limit for bidding. See, in the original pure red herring prospectus model, pure red herring prospectus, the company will not give any idea. They will not any limit. They will only give a time limit. They will say the red herring prospectus will be open for this duration, right? And they will send it only to the QIBs and HNIs who will present bid. Who will present bids. In the bid, the QIB HNI will only say, I will take so many shares, which will be huge, like 10 lakh shares. And this is the price. The original pure red herring, it was literally a price discovery process. But today, as to what happens is, they don't give that much. They prescribe a price band. So they say, hey, we don't know where we are. We think it could be anywhere in this range of 300 to 500, 350 to 600, something. Within that range, the bids have to come today. If you are in an IPO when you are bidding, you will also you can see the red herring prospectus coming, where you will have the price band. Now, when you are applying, you have to be clear. See, you have a choice now. Within that range, you can bid anywhere. But you should be careful now, because suppose you bid low, you might lose it. Suppose you bid high, okay, you will get it, right? You will get it. But then, even then, you have a chance to walk out in case there are any material changes between the original red herring prospectus and the current prospectus. Okay. After my Maruti Udyog experience, whenever I go for, I rarely go for IPOs unless the company is solid and the valuation is good. I will do the valuation myself and I will check up whether this company is overpriced or underpriced. And at least it's correctly priced. Then and only then will I apply. Otherwise, I won't waste my time on all IPOs. And so when I do that, I ensure, because I know for sure this company is good, yeah. So I will always go for the higher price band and I will apply. That way I'm sure of getting the share. Okay. That is the idea. This is the red herring prospectus is possibly one of the good things that happened, both, of course, more to the company than to the investor. But even, see, for the investor also now you get a clarity. Now, what is it? See, as an investor, you have to be careful, sir. This whole topic is about protecting the investor. And the whole topic is working on disclosure. So once the disclosures are made, once everything is given to you, it is you have to take a call. It is up to you to do it. See, today, from now on, you're going to find so many IPOs coming. You're going to see so many. All donkeys are going to come. Gadas are going to come. Those shares are also going to be there, and they will get huge hype in the market also. Fraudulent companies will come. SEBI cannot do anything about it. Maximum they can ensure disclosures are made. In fact, some companies are going to come with high risk factor. But nobody will read those risk factors because, see, in the prospectus format, I'm sure some of you would have by now downloaded a prospectus. The risk factors will be given in very small print. There's a separate guidelines. SEBI has given a separate guidelines on how the prospectus should be, how the wording should be and all. What is the point size and all. But that point size alone, within that range, it will be very small. You will miss it. Whereas the good points, they will highlight it. Mega issue, and they'll highlight it. Okay. So nobody can protect a person from their own ignorance. Nobody can protect a person from their own ignorance. And the only cure for ignorance is knowledge. Right? The only cure for ignorance is knowledge. Knowledge is given to you. All these disclosures ensure that you get full knowledge. Also, yesterday I had a question on Rule 9A. Rule 9A deals with dematerialization. In fact, that Rule 9A actually talks about unlisted companies getting dematerialized and all. But as of now, it's not compulsory. Many unlisted companies have not got their shares delisted. They're still, in fact, many companies don't have physical shares also. Small unlisted companies. Later on, when they go for public issue, they will get it dematerialized. They will first issue the public physical shares, then go to the DP, get it dematerialized, and then only the public issue. So if you want to go for an IPO, your entire share capital should be in dematerialized form. Rule 9 and Rule 9A, I'm dealing with it in share capital. I verified. Under the dematerialization topic, I'm dealing with Rule 9 and Rule 9A in detail. When we come there, I will tell you. But that query was meant to find out how you are saying unlisted company, no need for dematerialization. There is a rule. 9A says you have to get it dematerialized, but it's very costly. Many companies cannot afford it. I think there is an exception. I will find out and tell you. By the time I cover share capital, now when I come to 9A, I will verify and get back to you. In fact, I used to have a co-faculty. When I was running an institute called Blue Dot Academy under the ACS Institute for the company secretaries, I used to have a couple of faculties in, company secretaries. They are top notch in this. See, the expertise on public issue is not with CS. We are only there for the financial part, valuation and all. The major expertise is with the company secretaries. You can't have an IPO without a company secretary. And one more problem here in public issue, merchant banking and investment banking is, there's a big competition there. You pure chartered accountant, with all your financial knowledge, you can't get into that unless you also, sort of undergo some kind of a advanced level MBA, an IIM or a top tier, slightly top tier MBA. Then you can get into investment banking better. Though there are people, pure chartered accountants, cost accountants, who joined an investment banking company at a lower level. Then by sheer, expertise and experience, they went on to become CEO. But you will rub shoulders with non-CAs also. Investment banking, you will rub shoulders with a guy BCom MBA. He may have more knowledge on the market than you. It's not based on financial knowledge alone and all your taxation, accounting standard. It is pure knowledge of market and all that. How do I value? I use what is known as the intrinsic valuation model, the discounted cash flow model, as propounded by a gentleman called Ashwath Damodaran. Ashwath Damodaran on valuation. Later on when you come to final, you might talk about him. That is the model I use. It's very complicated model, but it's very, very powerful. We have to see the reinvestment rate. We have to see even arriving at the discounting rate itself is difficult thing. So you build everything into that. You build all your risk into the denominator and you project. And I have been able to almost accurately predict shares and buy. When they were undervalued, I got them. I offer a course at certain B schools, selected B schools. I am a professor on valuation. I teach valuation there, business valuation. And my students, they do practical valuation. I don't teach them theory. The day one itself, I start them on practice. I give them the assignment. They have to select the industry, first step. Then they have to select 3 companies, then compare, then select which company they think is the best in that industry. Not just in terms of performance, but in terms of valuation. So they have to come out there. Then as I teach them valuation, they do the valuation for that company. And they come out with a decision to buy or sell. So by the end of about, say, 60 hours or 45 hours, these guys, they know how to do it. I teach them practically. But they also come out of all that bullshit that they learned about, companies and all. They remove all the hype. They learn how to read the pure financials alone. They learn how to read the balance sheet P&L alone, project, look at the industry information, build it into the financial model. Okay, don't worry. You will learn this when you come to final, because that is our expertise. As chartered accountants, that is our expertise. But unfortunately, even many CAs get carried away with the hype given by the market, especially these so-called MBA investment bankers. They'll give all bullshit. And the minute you start believing that bullshit, your valuation is out. You should be clear. Okay? Be careful. Reality checks should be considered. It's a big topic. which I used to deliver lectures for investors. But invariably, when I talk like this, many investors and even you will get angry. Sir, market is bullish. Now is the time to buy like that. I'll be laughing because now is the time possibly not to do anything. And now later on maybe is the time to sell. Abhito is not the time to get into the market. Unless you are 100% sure that the company is undervalued, market is not recognized it, it has potential. Like recently Wipro came like that. Very rarely you will find like that now. Because most of these fellows are overvalued, above their intrinsic value. Then onwards you are only playing on the market momentum, sir. You see, it's a horse that's going fast. You are catching the tail and going. So when that fellow will tumble, it's a roller coaster ride. I don't join that roller coaster ride. Or rather, I'm there in that ride, but I'm there. I got in long ago. When the price was, nobody knew about it, I got in. I'm enjoying the ride till it goes on top. There I will get out. On the top area, I'll get out. And then when the crash happens, I won't be there. I'll be watching those crash fellows going down. Anyway, this is not the topic of the day, but since we are talking about prospectus and IPO, I am tempted to give my unnecessary views on investment and things like that. But basic jnana, I'm telling you, boss, you're all chartered accountants. Use your brain. Don't believe market information. Don't believe all these donkeys, what they're telling. Non-professionals and all, what right they have to talk. So always have a skeptical view about what MBAs are telling. Though I am myself a faculty for B schools. Sometimes these guys get carried away by the immediacy error. It's called an immediacy error. Yeah, all of us are bound by that. When something is there in front of you, you give more importance to it. Whereas you forget the past. Whereas a good investor like me, I will always look at the past. What happened in the past? So that will get repeated again, right? So all these philosophies, if you imbibe in your life, your valuation is going to be there. Otherwise, number crunching any donkey can do with an Excel spreadsheet. Yeah, what do you think? Number crunching any donkey can do. The right formulas are put there, you will get a number there. Investment is an art and a science. Okay, valuation is an art and a science. If you get the opportunity or is part of your syllabus, if you have valuation, read some of the white papers published by Ashwath Damodaran. Genius. Or go to YouTube and listen to a couple of his lectures. Little advanced, but I think it's very good. I'm a great fan. I've attended his online course during pandemic, I attended his online certification program. Brilliant. Genius. That's all I can say. Okay. As chartered accountants, we have to appreciate Ashwath Damodaran because he gives a lot of importance to the balance sheet and P&L. He relies a lot, not fully, but he ignores some things. But at least the base for him is our signed balance sheet and P&L. Anyway, fantastic. Thank you for listening to this nonsense that I've been talking about investment and all that. But then, if you find it interesting, good. Moving on, abridged prospectus. See, again, you should give a background here. SEBI came out with this concept, said every application which is given to the public should be accompanied by a prospectus. Now you check out, you download a prospectus and you see it. It runs into 45-50 pages. It will be like a small booklet, prospectus. It will be stapled. It will be like a small booklet. It will contain all data. It is important. Nobody reads it. So they will print. One of the major costs in public issue is printing costs. They will print the prospectus, application forms. See, suppose I'm expecting, for example, 10 lakh applications. Minimum I should print 25 lakhs application forms because that will be distributed like, sort of take it. Out of that, only a few will come. See, all this story, my dear friends, is when we had paper. When it was paper, companies found it very difficult to print. And SEBI came out and said, every copy of the application should be accompanied by a prospectus. What are you telling? How can I do that? So then SEBI said, okay, you don't have to give the entire prospectus, the entire thing, but you have to give what is known as abridged prospectus. Abridged means made short. Abridged means made short. Don't confuse this with bridge. Bridge is different. Okay. Abridged means made short. For example, Bleak House by Charles Dickens runs into 1,000 pages, 900 odd pages. Bleak House. Great Expectations, 700 pages. David Copperfield, 700 pages. You would love to read Charles Dickens, but originally, if you read, it will take you. Normally, I finished all the. When I was in school, I finished about 7 novels. Original. Now I'm reading the other ones also. The David Copperfield, Oliver Twist, and Nicholas Nickleby, I read when I was in school. Point I'm trying to make is that reading it is so, but I still want to read Charles Dickens. I want to enjoy that story and something, the flavor of Dickens. Then you can read an abridged version. Means what? A version made short. Maybe say 200 or 300 pages. So sometimes, Charles Dickens will keep on giving descriptions, blah, blah, blah. Like me, he will get into unnecessary areas which have nothing to do with the plot. He will waste your time because he was writing for a different audience, who had time to read. So the point here is you and I, current modern people, you people don't have time. So, but you want to read Charles Dickens, then we have to abridge it. Abridge means to make short. So now you understand, now the big prospectus is abridged to make it short. But it will contain, it is a memorandum containing such salient features of a prospectus. Salient means most important, very important. So those parts or features of a prospectus which are very important will be contained in the memorandum, especially about management, about valuation, even the abridged financial statements should be there, right? So that will be a single sheet or maybe 2 sheets. Now, that they said whenever you print an application, you print the abridged prospectus along with it. Then somebody said, even that is costly, sir. They made a calculation. So SEBI later on said 2 copies of application along with 1 abridged prospectus. So for every 2 applications, you give 1 abridged prospectus. They can tear it and use it like that now. But friends, all this is an old bygone era. 5 years ago, bygone era. See how in our changing world, what happened 5 years ago is an old history, Baba. All paper, what nonsense. Today, everything is digital, boss. You want to read the prospectus, you download it in your mobile and you read it. So what's the big deal? But still, the is there. It still makes a purpose. A purpose in as much as I told you, there are people who don't want to read the whole prospectus. They want to get flavor. Tell me what it is. For them, the abridged prospectus will be very useful. It will contain the salient features of a prospectus. So, every application for subscription of securities should be accompanied by abridged prospectus. This is the point. When the man you give him an application for subscription of securities, along with that you should say, hey, please read the prospectus. Right? Exception. We already talked about underwriters. The underwriters, what they do, they enter into an agreement with the company by which they agree to take up the shares which are not subscribed. Suppose I'm going for an issue of 1 crore shares. Suppose at the end of the day, only 80 lakh shares are subscribed. There's an under subscription. 20 lakh shares are not taken up. If I have underwriting is not compulsory. Underwriting is not compulsory. But if I have underwriting, it's like insurance. Then what happens? The underwriter will have to take that 20 lakh shares. Whatever. He will have a limit. So he might say, I will take up to 10 lakhs. Then up to 10 lakhs, he has to take it at the price. For this, he will get a commission on that 20 lakh. Suppose I have agreed to take 10 lakh shares. Even if I don't take it, I will get commission at 2% or 3% or 5% on that. We'll be seeing it when we come to share capital. Why I'm saying, in order to enter into underwriting agreement, I will be sending some information to the underwriter, right? I will be sending whether registered underwriters are there. So we'll be sending a bona fide invitation, telling them, hey, we are coming out with an IPO. These are our financials. This is our information. Please tell us if you would be willing to underwrite our issue. That is an exception. Also, when I'm going for a private placement and not going for a public offer, no need for every application to be given and closed with this. Okay. So these are the 2 exceptions, right? But if you're going for a public offer, 100% every application should have a abridged prospectus. Why? Because if you should give that knowledge to him, so that tomorrow nobody should say, I'm not aware. So this is how SEBI will protect investors. See, they're doing so much. They're saying, even if you don't want to read the full prospectus, see, I'm giving you abridged prospectus, read it. No, I will not read. I will read what some donkey is writing in some newspaper like Economic Times. I will believe that donkey only. I will not read the prospectus, and I will invest in this company. Tomorrow, Tobacco Limited folds, crashes immediately. What was SEBI doing? What are chartered accountants doing? What are we doing? We gave you all the information, Baba. Balance sheet is there. Did you read the balance sheet? Not you. I asked them. Sometimes I get very angry with investors forums. When I go there, I even abuse them. I tell them, don't blame chartered accountants. You please tell me, how many of you read the prospectus before investing in that company? No, Mr. Srikanth, what do you want me to do? As a chartered accountant, you want me to come to your house and read it aloud to you, page by page, is it? And tell you, is it? Boss, I have given you my opinion. I have given the balance sheet. I have signed it. Paka, you read it, Baba. You make your own informed decision. When something goes wrong, immediately, what are the chartered accountants doing? What we were doing, we were auditing companies and we were giving you information which you did not bother to read. Instead, you read report, some write-up given by some donkey who doesn't know anything about this. He wrote in Economic Times, you read that and you decided to invest in this company. Whose fault is that? I mean, sometimes I get very emotional while talking to investors, and beauty is, after I abuse them also, they will keep listening. Because after I abuse them for half an hour, one of them will stand up and say, Mr. Srikanth, can you give me any tips for investing? Can you give us any shares which you are now currently investing? I said, Hadapavi, I have told you not to rely on anybody, do your own research now. No. And my misfortune at that time, I would have done a research on one or two companies and I will share that research with them. And some of these donkeys will invest and make money also. Unfortunate. I'm not happy with what I'm doing. I'll tell them, boss, I'm telling you now, you don't believe me. You take the balance sheet, 5 years, 10 years old balance sheet. You project, find out the growth rate. See what the company is doing. See what the company is proposing to do. Then based on that, you project the sales. Then based on that, you come with the free cash flow. Then discount it. See what's the valuation. Sir, all this is very difficult, sir. Tell us quick method, sir. Quick method, go. Okay. Correct. Nicely put. Puja is abridged like the exam time. Absolutely. In fact, in a way, the notes that I'm creating for you or I created for you during pandemic is an abridged notes. The entire company set you cannot read. The entire institute material you cannot read. So finally, nearing the exam date, yes, you should read notes. No problem. And remember, my dear friends, Prabhas Jain, I have to thank him again and again. If he is here, I would wish Prabhas Jain should say hi. I hope he is here, Prabhas Jain. Because remember, the teacher and student co-create the content, co-create it. You are helping me to make these notes better. How? By pointing out sort of gaps and errors like Prabhas Ji did. Because, see, I'm human, I will make mistakes. So, in a way, Sahana Vavatu, Sahana Bhunaktu, Sahavidyan Karvavahai, Tejas Vinavadhitamastu, Mavid Vishavahai. It's a famous quotation. I'm sure many of you know it. Shantipat. The Guru and Sishya together will say, let us create it together. Let us enjoy this knowledge together. Let both our Tejas Vinavadhitamastu, let the knowledge of, the brightness of learning, let it grow in both of us. So by teaching you, I'm also learning. And by learning from me, you should also add. That's why I want to really thank Mr. Prabhas Jain for the wonderful input that he gave, by which these notes have become better now. Sorry, that doesn't mean that it's up. That means any errors are there. Not like that. Some few would be there now. You can always welcome to find out. Okay. Ayush ji is asking a good question. Ayush Agarwal, again a very brilliant student. I like him. Is balance sheet also available? Better is what I suggest. If you want to get balance sheet, there are two ways. One is the company ka website itself will have financials. You visit any listed company ka website, but for some ganda company. See, the minute this fellow does not have a good website with financials, that itself is a signal that he is not worthy of investment. Straight away. It's a straight entry level itself. Threshold level, reject him. He is not willing to give information to investor. But if you go to the website, some of the top companies, most of the easily about 5,000 listed companies, in their website, you will find financials. You go there, you will get the current financials. There they will have a drop down called archive. 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 Archive means old records. There, up to 10 years you can get, depending on the company's life, 10 years you can get balance sheets. That is how I get it. I mean, of course, I don't do that. I'm a lazy bugger. My office, one employee, she will go download it. Then I have a format in which it has to be put. For her, I know it's a knowledge. Now, as a trainee, she learns how to do it. Then it comes to me. Using that, I will start doing. Right? So, please don't go and download the balance sheet and see. In fact, as we go on to accounts, audit and all, I would strongly advocate that you should download, for example, Dabur India or Maruti Suzuki and keep it with you and go through it. That way, you will revise for company law, you will revise for accounting also, advanced accounting also. You will know accounting standards now, practically. So my suggestion would be you do that. Okay, and go through what they have done. Suppose you find something you are not clear about, maybe in any class, any faculty, myself or others, fag end when the faculty is finished the topic, any more questions. If he is asking, you raise this question and get yourself clarified. Okay, that is how knowledge grows now. The Institute of Chartered Accountants of India is a knowledge factory. All of us create knowledge. Teachers, members, article clerks, students, everybody. We are in the knowledge business, right? So all of us together, we co-create this knowledge. Moving on to deemed prospectus. Again, a very, very important concept. Aram say, let's go through this. There are some conditions you have to understand. Based on that only, we have to do this. Now, the word deemed, you have already come across it before. Deemed means something which is not there, we say it is there. Something which is not there, we say it is there. Right? You are deemed to have done this means, I have not done it, but you say you have deemed. Deemed means thing. Already deemed dividend. See, the company gives a loan to a director. The closely held company in which the public are not substantially interested gives a loan to a person who has substantial interest in the company. It's a loan. But 222E of the Income Tax Act says, though it is a loan, to the extent of the accumulated profits of the company, this will be deemed to be a dividend. This will be deemed to be a dividend. So, deemed. Though, see, the intention was to give a loan, he will repay it. But at the time when I'm giving, if the company has accumulated profit, straight away they will deemed dividend. Okay, that's why it's called deemed. Though it is not, it will be treated as if it is. So, this is where I am sending a letter to people. I'm sending a document containing offer of securities for sale. Okay, sending a letter. I am not the company. I am a third party. I am the owner of the shares. I am sending this letter to people saying, hey, please buy my shares. Please buy these shares. Technically, that should not be a prospectus. The company is not issuing it, nor is the promoter doing it, like in an offer for sale. It's a third party is doing it. But even that document, which contains the offer of securities, will be deemed to be a prospectus, but subject to certain condition. First is, the allotment of securities was made by the company to this third party. Usually, the third party will be called issuing house. The third party will be called issuing house. Again, you have to go back to England, Victorian England, when promoters were merchants and traders. They did not have financial knowledge. So they relied on merchant bankers who had issuing houses. So what the issuing house will do is, they, as I told you, do you remember earlier? They will buy the shares of this company bulk. And then Once this fellow gets the money, he will take the ship. He will go to Argentina to develop the mine. Okay. In fact, that was a big thing. Of course, England couldn't do much there. It was Spain and Portugal which could exploit South America. So there it was silver mines. Africa, it was gold and diamonds. So they went there and they made money. But for that, he needed money. So the issuing house will give him the money. He will allot the shares. Company will be formed. Shares will be allotted to the issuing house. Issuing house will give money. He will go start. That is not a problem. That's okay. That was perfectly all right. Then the issuing house will in turn make an offer to the public through a offer for sale type of a document, and they will issue. That was happening long ago. But later this concept was sort of used to circumvent the rules for prospectus. What many companies used to do, they will allot the entire shares to an issuing house. Then that issuing house will send a letter to everybody, which can tell anything and everything now. So they will tell all sorts of tall promises to the investor. In order to control this, the section was introduced. It is there in the old law also. Section 64, if I remember right, of the old law. 25 of the new law. They said, look here. If a person is sending an offer for securities and those securities were allotted to him by the company, the purpose of that allotment was that the person will offer this security for sale to the public. So the allotment of securities is made by a company with a view to all or any of those securities being offered for sale to the public. See, please don't confuse this with offer for sale. We'll be seeing offer for sale a little later. Offer for sale currently as we know it, promoters are having shares. Those shares are offered to the public along with the IPO. That is called offer for sale, OFS. This is offer for sale by a third party to whom the company is allotting the shares. The understanding is once the shares are allotted, they will be given to the public. The reason is they want to circumvent the rules relating to prospectus. Initially, what they said in 1970s, they started, they said, hey, look here, the company is not issuing it, Baba. Promoter is not issuing it, Baba. I am a total third party. I got these shares from him. He allotted it to me. I am the owner of the share. As an owner of the share, I can ask people to buy it from me. Contract. Like similar to a secondary market. Who can prevent me? I'm just sending a letter to everybody saying, hey, please, if you want to buy the shares, I'm having it buy. Why should I comply with the requirement of prospectus? So they amended the law and they said, even though you are a third party, the document that you are issuing containing the offer for securities shall be deemed to be a prospectus, provided the two conditions are satisfied. Two conditions are to be satisfied, either or. Even if one condition is satisfied, it's okay. Okay, either or. Either or is very dangerous. See, when they put an and here, you have to, both the conditions are to be satisfied. But when they put an or here, it means even if one condition is satisfied, is enough. Even if one condition is satisfied, it is enough. So, what are the two presumptions? What they are saying, the allotment was made with the view to the securities being offered. Now, immediately they will come back and say, hey, Baba, that was never our intention, yeah. Well, he allotted the shares to me. I then made an offer. How can you say the intention was for allotment? Then the government says, look here. We don't know what was the mind of both of you, but the action will be very clear. If it is shown, it shall be shown that the offer for sale to the public was made within 6 months after the allotment or agreement to allot. Means the shares were allotted and within 6 months after the allotment or even an agreement to allot, the shares were offered to the public. Within 6 months you are doing it, yeah? Such a short time. That means the intention is to offer to the public. You are not an investor. You are obviously an issuing house trying to immediately sell it to the public by a letter. So, time duration. The shares may not actually be allotted. There could be an agreement between the company and the issuing house that they will allot shares whenever they want. So, immediately what this guy will do, he will send a circular to his clients, public and all. Please buy shares of Dubacore Limited. We are having special quota. We will give you if you don't buy now, you won't get it like that. All nonsense statements they will make. And public, Gaddas as usual waiting to be cheated. Every day a new sucker is born. In fact, they will make a big thing of it. You know what? I'm getting shares of such and such a company, Dubakor Limited. Only it's a very, very special thing. Please, if you want, you tell me, I will try to get you. Like that, they will create a hype for that nonsense. If it is done within 6 months, obviously, in that document, he won't give financial statements. He won't give risk factors. He won't tell anything now. This was being done. In order to curb this, they said, look here, if you are making the offer within 6 months after the allotment or agreement to allot, then that document shall be deemed to be a prospectus and it should comply with the rules relating to prospectus. Section 26. It should comply with all the rules relating to prospectus. Pakka. That's it. Once you make that condition, now what is the charm in this? They'll as well go for a normal prospectus and they'll issue. Right? Which is why you will never find a deemed prospectus in reality. Nobody issues deemed prospectus. Why? Because, sir, why waste time? Actually, I might go for prospectus now. Why? Because a deemed prospectus should have the same format as prospectus. Then why I will use a issuing house, blah. I will directly go to the public and do it. Right? That is all. Anyway, so within 6 months or at the date when the offer was made to the public, the whole consideration to be received by the company in respect of the securities had not been received by it. This is another condition. See, the offer is made after 6 months. But at the time when the offer was made, we asked the issuing house, have you paid the entire consideration to him? The company we asked, has he paid you the entire value of the share is 10 rupees, premium 25 rupees. Have you got 35 rupees, my dear friend? No, sir. He has paid only 5 rupees. Then, even though it is made after 6 months, sorry, it is a deemed prospectus. See, then obviously the intention is what? He is not an investor. He is going to promote it. And once he gets the money from the public, he will pay you and you will allot. Right? So, that is also deemed prospectus. Okay. A brief flowchart also would be very helpful, where I'm not getting any major queries from anybody. I hope you are able to access the query pad. So, first question you have to ask, has the allottee sold shares to public within 6 months? Yes. So, made key offer, then it is a deemed prospectus. No, here not within 6, it is 9 months. Has the allottee paid full consideration to company before offer for sale to public? Yes. That means what? Both the conditions are not satisfied. Now, the allotment is made after 6 months. Allottee has paid full consideration. Then it is not a deemed prospectus. But if it's a deemed prospectus, you have to ask the first question, is it 6? He says, no, it's not 6 months, 9 months. Then you have to ask him the next question. Have you paid the full consideration, Baba? No. Then even though it is after 6 months, it's a deemed prospectus. Suppose he says, I'm doing it within 6 months. Even if he has paid the full consideration, it is a deemed prospectus. Got it? In case he says, I am doing it after 6 months, I have paid the full consideration, then he is a genuine investor who is now selling his shares. Not a problem. It is not a deemed prospectus. Hope you have understood. Archie, I'm not able to understand your question. Proposed director can also be, say, deemed prospectus. No. I gave the 222E example for a different purpose to help you understand deeming. Archie ji, you have to, Archie, I think, you have to clarify your question. Otherwise, I'm not able to understand. Assumed, presumed. Deemed is presumed. Presumed. Okay. Not assumed. Assumption is different from presumption. Assumption is different from presumption. See, I am coming to, you are hosting a party. I'm coming with a lady. She is coming with me wherever I go and she is having dinner with me. We are living together. What is the presumption? She is my wife. Got it? Deemed. Okay. Just giving one example to help you understand. Certain course of conduct, certain behavior will lead to presumption. Even though it is not actually true, we are entitled to presume that it is true. That is called deeming. Presumed. Don't use assumed. Assumed is different. You can assume 100 things. I cannot. You should, based on certain course of conduct and certain behavior, you can say your presumption is possible. Okay? Presumed. Yeah. My humble request is you change that word assumed to presumed. Presumption. No, when you are sharing it with them, yeah, even employees are public. Even then it will become deemed prospectus only. Even if you share it with an employee, if the intention, if these two conditions are satisfied, then even if it is an employee, it is prospectus. Okay. I can understand Hindi, but I cannot speak Hindi fluently. So, no problem. Do raise. If I have a doubt, I'll ask you. Yeah, I think your question is, if it is given to employees also, will it still be a deemed prospectus? Yes. Sir, issuing companies do not exist now, madam, because, see, your merchant banker could become an issuing house. A merchant banker could become an issuing house, right? Sometimes they do the role, but then these conditions are there. No? So what they will do, see, even QIBs and HNIs could become issuing house. Okay, so I am a QIB or a HNI. What I will do, you need money immediately, right? You allot the shares to me. Okay, I will give you bulk amount, take it. Then you will start functioning. Then I will go for, but usually what in those days, at that time we will do, see, this is usually happening when you have, see, today there is no issuing house. Instead, you have PE funds. PE fund. PE funds, what they do, they collect money from a lot of people. They are registered with SEBI. Then this money is invested in a startup company or in a SME, which is having potential and which is now not capable of going to the public. What the PE funds do is they invest. Then they sit on the board for 2 years, professionalize the company, increase the turnover, get the better valuation. And then when the boom is there, when there's a buoyant period of share market, at that time, they will make the company go public. They will make the company go public. At that time, what these guys will do now, they will use OFS route. Because it's happening long later after allotment. So immediately after allotment, it's very difficult. But still, if you comply with these two conditions, do it after 6 months, pay the entire consideration to him, you can do that. See, some HNIs do it. For example, Junjunwala, they do it. They invest, say, 5% of the company, they'll take a stake. Then they will just wait. Because then when the market goes up, this company's share goes up, they will send a letter to they will have a lot of clients. They'll send a letter. That is technically, it will be deemed. But if you satisfy beyond 6 months and you ensure that you have paid the entire consideration to the company, then no problem. So it is there, but rarely. What you are trying to prevent here is somebody, blindly they have an agreement to allot. Then this guy misuses this opportunity to send all sorts of donkey statements to the public, circumventing. So there they say no. If you're doing it within 6 months and if you have not paid the full consideration, it is a deemed prospectus. It has to comply with all the requirements of prospectus. Right? Yes, Mr. Himanshu Gupta, I'm very happy for this question. If there is any misstatement in the prospectus, instead of saying manipulate the prospectus, you can use the word misstatement in prospectus. If there is a misstatement or false statement in the prospectus, then company is also liable. Provisions of section 26 as to content of prospectus, etc., expert consent, etc., will apply to the document containing offer for sale also. So any person who is named therein as a director, proposed director, blah, blah, all are liable. Okay. Good question, Himanshuji, but You jumped the gun, but then that's a good question. Proposed directors cannot be called deemed directors. The proposed directors are proposed directors. They are people who are not directors today. They will become director later, but they are named in the prospectus. I gave Shah Rukh Khan ka example now. Why? So the minute you say Shah Rukh Khan, Amitabh Bachchan, immediately you want to invest. Why? Because they are all big celebrities. But he will not be a director today. The company is saying Shah Rukh Khan will become a director of this company. He is a proposed director. But his name is mentioned in the prospectus now. So why did you invest here? Because you saw Shah Rukh Khan's name. Therefore, Shah Rukh Khan also liable as a proposed director. Deemed director is different. See, the concept of deemed director is not there in the law now. It was there in the old law. Deemed director is a person who is not a director, but the board of directors, MD, etc., are accustomed to act in accordance with the directions and instructions of that man. He is not on the board. His name is not there in the list of directors, but the board of directors and the MD are all chamchas. They are chamcha. They'll put ching. They will only do, so they are his employees, maybe nominees. They will do what he says. Yes, boss, no boss. So though this gentleman is not a director, because the MD and board are accustomed to act. See the word, accustomed to act in accordance with his instructions. That deemed director also will be liable. Prospectus may, such deemed directors are not involved. That is a bigger thing. When you come to final, when myself teaches investigation, at that time we'll talk about deemed director or concept of a deemed director. A person in accordance with whose instructions or directions, the board of directors of a company is accustomed to that. So that company also you can investigate. So that will come later, don't worry. Currently, don't confuse proposed director with the deemed director. Deemed director, alage, totally different concept. If the CFO name is in the prospectus and he has been appointed as CFO by the board, he is also liable for misstatement because he is a key managerial person. No, CFO is part of the KMP now. So if he is mentioned in the prospectus, then for him also, if there is any misstatement. It need not be there, but if you mention it, if he signs somewhere, then normally CFO will not be involved. But then, if he is putting his name, gone. He is also liable. Yes, if a chartered accountant or a company secretary has given their opinion as an expert, their consent has been given and it has not been withdrawn. And if there is an error in what he's saying, factual error, if he has made a mistake, then he is liable. But there might be other misstatements in which he is not connected. Then he will not be liable. But there could be a misstatement which he has made in his report. Then he is liable. That's all. As an expert, to that extent only he can be made liable. So some other false statement made somewhere else, not relying on the expert. Okay? Then he cannot. We'll see that later when we come to defenses. Yeah. Sakshi Balkawade wants me to explain the flow of deemed project, which is, see, what you have to find out. Has there been an allotment to somebody? Yes, allotment. Then you ask the question, has the allottee sold the shares to the public within 6 months? Means has he offered the sales share to the public within 6 months? If the answer is yes, within 6 months means even if the entire consideration has been paid, if the offer is made within 6 months, the document which contains the offer is a deemed prospectus, should comply with the requirements. No, he says, no. The offer was paid 9 months afterwards. Then, next question. You ask the allottee, did you pay the entire consideration? Or you ask the company, has he paid you the entire consideration on the date of his offer? No, only part. Then also it will become deemed prospectus. But suppose the allottee says, Baba, I am making it 9 months later. I have paid him 6 months. After 6 months, I have paid him the entire consideration. Then it is not a deemed prospectus. Okay. So, Sakshi ji, I have explained it again. In case you have understood it, kindly confirm that I have understood it. So that I feel happy. I wasted my throat to explain again to somebody she should tell me that she has understood. Or if she has not understood, then she should ask a specific question. This part I don't understand. Explain kar dijiye. I will do it again. No problem. But now onwards, no complete explanation. Only specific. Okay. See, Rakesh Jhunjhunwala is a big shot. No, I am not telling anything wrong about him. See, Rakesh Jhunjhunwala is a famous investor. Now, again and again, I'm telling you, will it be a deemed prospectus or not? How to answer? It is not because of Rakesh Jhunjhunwala. If he has been allotted, you should ask him only 2 questions. Did you make the offer within 6 months? No. Have you paid the entire consideration to the company? Yes. Then not a deemed prospectus. If the answer is yes, then deemed prospectus. Have you got it? So it is not dependent on Rakesh Jhunjhunwala. It is dependent on answer to these 2 questions. Right? Thank you, Sakshi. Anybody. The allottee can be anybody. It can be a qualified institutional buyer. It can be an HNI. Usually only they can do it now. See, only they will have the money power to do it, right? You and I, can you become issuing house? Because the company will tell you, take 10 crore, immediately give me 10 crore allot shares. Can you give? Only those who can give it will become issuing house. See, nothing wrong in such things. Only thing, it should be done after 6 months and the entire consideration should be paid. That is all, right? One second. Beautiful. Now, so in addition to the provisions relating to content of prospectus, the document should also state the net amount of the consideration received or to be received by the company in respect of securities, the time and place at which the contract for that agreement, that agreement to allot or whatever, the sale of securities, that contract should be inspected, can be inspected by members or by public. So in addition to the normal content of prospectus, you should also say what is the net amount of consideration received by the company. Why? Because see, suppose the company is receiving 450 rupees. Now our friend is offering it at 600, 700 rupees. So people should know that there is a difference. So we will do our own valuation and we will find out. Okay. In case of firm or company, this document, this deemed prospectus should be signed by 2 directors. Even though the offer is made by a third party, it should be signed by 2 directors. Okay. In case the issuing house is, this is, the issuing house may be a firm or a company. The issuing house may be a firm also. Broking firm could be there, who may also do this. Sometimes broking firms also do this. And many broking firms are still firms. If so, then that it should be signed by 2 partners of that broking firm or issuing house or 2 directors. Right? So this is the friends, again and again I'm telling you, deemed prospectus is meant to control misuse of the law, so that the company should not circumvent the prospectus route by allotting shares to somebody and then that person goes around making letters to all people and all, which doesn't comply with prospectus. In order to stop that, they have introduced deemed prospectus. Once this rule has come, there is seriously no need for deemed prospectus. See, once something is controlled, nobody will do it now. They will prefer to go to the normal route. So please don't think, sir, how to issue deemed prospectus. Don't issue. Rational prospectus. That I would advise. But somebody may be genuinely buying shares as an investor, selling it later to the public. Nothing wrong in that, provided it is done after 6 months and the entire consideration has been paid on the date of offer. Okay. So here is a small test question to find out if you have understood it. Let us see. You can put in your answers there. Capricorn Limited allotted 1 crore, there is 10 million shares of rupees 10 each to Silver Tongue Financial Advisory Services Private Limited. Can you see the name itself is indicating that it's an issuing house type, maybe a QIB or a non-banking finance company. Silver Tongue Financial Advisory Services Private Limited at a premium of rupees 25 per share. So 10 rupees face value, 25 rupees premium. The allotment was done on 5/2/2020, 5 February 2020. Capricorn Limited was paid the entire consideration of how much? 350 million, right? 10 million into 35 rupees, 350 million. On 15/2/2020, entire consideration was paid. Silver Tongue Financial Advisory Services Private Limited made an offer for the sale of the shares. They made an offer to the public on 1/8/2020 by sending a letter of offer on their letterhead, making tall promises about the future performance of Capricorn Limited, right? So, is this letter of offer deemed to be a prospectus? Answer. Will your answer be different if the offer is made on 15/8? You can give your answers. Just apply the two conditions. You will get the answers. Keep the flowchart in your mind. Ask the question to Silver Tongue Financial Advisory. I'm waiting for your answers. What is the name? So, Silver Tongue means person who can speak very well. Silver Tongue. Person who is good at speaking, who can convince people, he's got a good marketing, selling tech. They're good salespeople. They will convince you to buy. They will sell snow to the Eskimo. Beautiful. Mr. Swarup Singh Raguntla gives me the answer. Yes, in first case. Yeah, why? Because let us understand. First question, was it made after 6 months? Was it made after 6 months? No, within 6 months now. From date of allotment, you count. Okay. So we have March, April, May, June, July, August. August 5th. This was made on 1/8, before 5th August or 4th August midnight. It was made on 1st August, which is well within that 6 months duration time. So, sorry, that this first point itself is clear. Has the allotee shown within 6 months? Yes, straight away deemed prospectus, right? So, if you remember the flowchart, it is enough, Baba. No. But remember, Silver Tongue has paid the entire consideration. That is not relevant because it was made within 6 months. But suppose you say 15/8, then has the allotee sold shares to the public within 6 months? No. Later. Has the allotee paid full consideration? Yes. So not yet deemed prospectus. Right? So in the exam, don't reproduce the flowchart. Use the flowchart. Flowchart should be in your mind. The flow. Using the flowchart, answer the question. Then only you have to write the answer. Right? Most of you have given the correct answer. Lattice is deemed prospectus. I do not understand what Thakur is telling, but anyway, deemed. Super. Deemed. In the exam, you have to little bit elaborate. You have to write. I'll teach you later. When we go inner depth into the topic, I will teach you how to present an answer in the exam so that you get more marks. See, there's a difference between right answer and well presented answer. Right answer will get some marks. But many times people ask me, sir, I wrote right answer, so why I didn't get? Presentation also matters, unfortunately. Okay. So I will tell you later, not today. Aaj to time is not there. Some other class, when I'm having little free time, I will tell you how to answer a question beautifully, so that if you present it in that way, you will get more. You can squeeze more marks out of that question. 15, yes, it is deemed prospectus within 6 months. Deemed prospectus, yeah, in the first case, correct. The letter of offer is deemed to be, yes, sir. Full consideration will be final prospectus. No, you are confusing. Full consideration is paid by silver tongue to this company. It is not final prospectus. Okay. On 15/8, it is not deemed because both the conditions, no, it is made beyond 6 months, full consideration received, not a deemed prospectus. Yes, deemed prospectus. If offer made on 15/8, no deemed. 6 months over. Beautiful. Correct answer. Sumit, see the way you have written it is elaborate. That is why you are right. Okay. Very good. Deemed to be prospectus. I'm sorry. Sometimes you might think what to do. But that is how you get mark here. One more thing. Yesterday I spoke about generation Y understanding generation Z now. But remember, the person correcting your paper, is it generation Z or generation, my generation? The person correcting your paper is generation X or generation Z? Definitely not generation Z, yeah. Or even Y. You'll be a very Buddha, na? Like definitely more than 40. Huh? Definitely more than 40. The paper corrector, or definitely more than 30. More than 30 itself puts him in generation Y. And most of us are old people there. So generation X. Which means you people have to understand that mindset and write the answer. There is no other way. You can't expect him to understand your shortcut language. You have to write elaborate for him, because then he'll get angry. And you, even though you are right, he may not give the full mark. See, for 5 marks, he's got 5 marks to give you. If it's the right answer, he'll give you 3 marks. He will withhold 2 marks. But if you present it well, nicely, you will get more marks. So 4.5 you can do. That is how you get a rank, or that is how you get exemption, or whatever you want. Whenever somebody says, sir, I will get exemption, I get little fra, I think he's a funny person, because why he will get exemption? His goal should be clearing the group, yeah. Why never say I will get exemption? Because exemption means, you know what? You get 60 in one paper and 30 in other papers, but you still fail. Then you need not write the exemption paper. That's all. Don't write for exemption, yeah. Write to clear. Means in all papers you should get above 50. Some papers you get above 60. You write both the groups, you are a rank holder. That was my target. All papers above 50. Some papers I will get 60, 70, 80 like that. So that total when it comes, my score will be way high. I'll get into the rank list. This should be your aim. I will get exemption in last. Why you want to get exemption here? Don't get exemption. Clear the group. This is my humble suggestion. See, our language should be positive language. Use positive language. Never. Some people will say, sir, this is my 4th attempt. Don't say 4th attempt. You say 4th session or 4th time I'm writing. That's all. Don't say attempt. Attempt now you are saying it's attempt. Don't say attempt. Okay. Sorry, this is my view. I may be wrong. I'm sorry, but humble request. Never use negative languages, because your mind is reading into that. Your mind is buying into that negativity. So it's saying, okay, it's enough if I get exemption. Then some topic where you're weak, now it will not perform. So I want to clear the exam. This time I will clear this exam. This time I will get not less than 50 in every subject. I will get 60 or 70 in casting, in law, like that you say. I will get a rank. Or that may be even not, but I will clear. The minute you ensure this, now you will get a rank. 50 above in all, 60 or 70 in 1 or 2 subjects. Write both groups together, your rank. Anyway, so this is my humble request to you. I'm not trying to influence you or tell you are wrong. You might have your own ideas. Please go ahead with your ideas. Just telling it because I got all India rank 4 times. Every time positive energy. Every time. I am not intelligent like many of you. Prabhas, Jainla, Nalam, useless. I have no brain. But I had positive energy and I had approach. And I had presentation. Positive energy, approach, presentation. That's all. I'm not at all having knowledge. But for the exam, I'll know what to write. When the question comes, I'll know how to present. Right? That's all. Chalo. Very good. Excellent. Even in second condition, it is not deemed. Madam Kiranji, first condition, it is deemed because the allotment is made within 6 months. Therefore, it is deemed. Second case, allotment is made after 6 months, full consideration received. Right. Let's move on. Excellent. This is again a very interesting concept. Throw your mind back to what we learned in incorporation. We saw there now, Alteration of memorandum object class. We saw that special category. Do you remember? A company which has gone to the public, it has raised money from the public, then that money is with the company, still with the company, unutilized. Now the company wants to change its object class. What did we see there? We said the company has to pass a special resolution. Also, it has to, if there are any dissenting shareholders, they have to be paid. You remember? So, similarly, this is similar. See, you are raising funds from the public by making certain statements about your company. You are saying, I'm going to do this, that, blah, blah, blah. Agree. That money should be used only for that purpose. Funds raised from the public shall be used strictly in accordance with the terms contained in the prospectus. In fact, later on, the chartered accountant, the auditor will have to give a utilization statement also. Frequently, we used to give certificates that this money has been used. There is a prohibition on deviation in the use of the proceeds for investing in equity shares of any other listed company. You cannot do that unless in the prospectus itself you have stated this money is being raised for investing in equity shares of such and such a company. Knowingly, if people are invested, they cannot. But at the time, what you told, I'm engaged in computers. I'm going to develop my software business. Already I'm doing so much, blah. So we believed you. Now you are telling I'm going to use this money to buy that company and all. No. That is not allowed. Prohibition. Okay. Go back to your learning in incorporation. What did we learn? Doctrine of ultra vires. What does your object class say? You have to limit yourself to that. Similarly, what did you say at the time of issuing the prospectus? If you go beyond that, it is ultra vires. See, so the doctrine of ultra vires is for memorandum. Here, the same principle will apply mutatis mutandis. That is with suitable changes. Means here, what is the restriction? What you stated in the prospectus. The terms stated in the prospectus is the limit. If you go beyond the terms, it is ultra vires. So you just have to make changes. Normally, a company cannot enter into a contract, or a contract entered into by a company which is beyond the scope of its memorandum object class is void, ab initio. Similarly, there is a prohibition on utilizing the funds for something which is not mentioned in the prospectus. See, here again, we are protecting the investor. Now tell me, what happens if there is a variation? I still want to vary. I want to do something different. At the time when I issued the prospectus, I honestly wanted to do that. Now I feel there's an opportunity, better opportunity, I want to do it. Nothing wrong, but the board of directors cannot take that decision. They have to go back to the shareholders and inform them about the variations in the terms of any contract mentioned in the prospectus or object stated therein. Okay. For example, one of the directors of the company is having a land. The company is proposing to buy that land. Valuation has been given by the valuer. Everything pakka. Prospectus contains disclosure. So and so is the director. His company, his land will be sold or acquired by the company. So as an investor, I am well aware of what is happening. And I saw the valuation. I said it's fair. After all, he is selling it to the company. No problem. I'm willing. I invested. Now, these guys are coming and saying, we are now changing the contract. Earlier, we said we'll give him 3 crores. Now we have decided it's not a correct rate. New valuation has been done. We feel that it's 4 crores. That is a variation in the terms of the contract. You wouldn't tell it to me in the prospectus. Now you are telling, sorry. Similarly, the object stated, therein should be approved by the company in general meeting. Right? You stated one object there. Now you are telling something totally different. No. So what you have to do, the board of directors cannot do this. They have to call a general meeting wherein all these new shareholders will come and they have to pass a special resolution. Also, the details of the variation should be published in 2 newspapers, English and vernacular, in the city where the registered office of the company is situated. In case some of the investors, let us remember, to pass a special resolution, you should get number of votes cast in favor should be 3 times the number of votes cast against, if any. Let us say that you gave the 2 newspaper advertisement. Also, you called the meeting. At the meeting, some donkeys came, they voted, special resolution passed. Even then, in that meeting, some dissenting shareholders are there. They very clearly tell, no, sir, we are not happy. We don't want to continue. Then, those who do not agree should be given an exit option, which will be decided by tribunal. See, because after that, you have to apply and you have to get the exit option. Valuation of share is clearly prescribed. Obviously, what price will you buy that share will be decided. And he can exit. Say, similarly, you have an object clause also. Do you remember? Similarly, you have where there's an unutilized amount raised from public issue. You want to change the object, then you have to pass a special resolution for that. Also, dissenting shareholders should be given an opportunity to exit. Right? This is nothing but protection of investor. And it is nothing but doctrine of ultra vires. Right? Okay. I don't know what is the meaning of what your question was. Using mutatis, what's the question? Can you restate your question? It is mutatis mutandis according to study material. Okay. Boss, original Latin, it is mutatis mutandir. Sorry. Okay. You want to follow the study material, please. Okay. See, don't. Okay, ma. Sorry. You are strictly following study material. No, actually it is wrong. What I am now putting is wrong Latin. It is wrong Latin. But chalo, I will satisfy you, Professor. Original you corrected. Your language will be corrected. Mutatis mutandir with suitable changes. Okay, mutatis mutandis. Anyway, if you still want to go with the institute material, please. I will. Small things. Yeah, what is there? Chalo, enjoy. If you want to follow the institute, follow. I have no problem here. It's not as if Julius Caesar is going to come and correct you. Huh? Okay, no problem. Mutatis mutandis. Chalo, enjoy. I will give it to you. You are going to become a great chartered accountant, Prabhas. Because main job in auditing is to constantly watch out for such things and say, hey, that is wrong. Don't do this like that. Good. Pujaji, let us go back. If both the conditions are yes, no. See the flowchart. First condition, no. Second condition, yes, not a deemed prospectus. Got it? So, please, if you want to take a photograph of this chart, you're going to get it 31st. At that time, you go through it. Your assumption is wrong. So, if both the conditions are yes, then it is not deemed prospectus. No. And it's not as per. See the flowchart. This is the flowchart. Take a photograph and keep it. Or maybe, yeah, no problem. See, most of you will have a mobile phone and using a laptop. Another humble suggestion, Baba, invest in your life. Get yourself a decent laptop. If your financial condition is not good, I'm sorry about it. But still, don't use mobile phone for lectures. See, little bit we can invest in our future now. What do you say? Books, equipment. These are our tools. So you have to invest in that. Please use your laptop for viewing and have a mobile phone also handy for queries and things like that. Think about it. Prabhas, I'm telling you, mutatis mutandir is correct now. But your institute metazing mutatis mutandis, no problem. Because I'm not a Latin scholar. My guru taught me mutatis mutandir. Mutatis mutandis or mutatis mutandir is a Latin term. It means with suitable changes as may be applicable. See, the doctrine of ultra vires is applicable for memorandum. That same principle we are applying for prospectus. When we are applying for prospectus, some things will be different now. Principle remains the same. The terms contained in the prospectus is the limitation of the power of the company. Principle is the same. But there it is object clause of the memorandum. Here it is prospectus. Terms contained. So these small changes have to be executed. So when something is almost the same, we'll say the provisions of that section will apply to this section, mutatis mutandis or mutandir. With such changes as may be necessary. Make the changes, right? This is a Latin term. Okay, I don't want to use Latin terms. Then what you do? You can straight away say the doctrine will apply with suitable changes. That's all. You don't use Latin. Right? See, when you use Latin terms, your language becomes more erudite. See, as a professional, as a chartered accountant, over a period of time, as you clear the inter, finish your articles, final, we expect you to become more and more intellectual and erudite. You are going to join a very, very select group of people. What top level of society you are going to go. So we want our students and members to be at that level. So for that, you have to build some sophistication in your language. Definitely. So you can't talk like some university graduate here. You're going to become a member of our institute. So that is why we are teaching you some sophistication of language, so that when you're talking to an advocate or talking to a professional group, you can use. But talking to your client, don't use that. Yesterday, I was having a client discussion when I was explaining HUF and all that. I was using simple language. And he was also very happy. He was saying, first time I'm listening to a chartered accountant who gave me ideas in simple terms. But still, when I'm addressing an income tax officer or when I'm addressing a commissioner, income tax appeal, or a learned audience or advocates, I will use complicated language. Because there I want to impress him as a member of my institute. So you should build up that type of... Madam, there could be some difference in the way it is presented. If you want to follow the book, see the difference in which it is given. Maybe the order in which I am giving is different from what is given in the book. Please, maaf kar dijiye. Either you follow this flowchart or you follow that flowchart. Got it? Pujaji, you follow this flowchart, you will not go wrong. If you want follow, otherwise, though you follow institute committee, no, I have no problem. Absolutely no problem. Because I have explained this logic many times to you. If you still want to waste your time comparing between two flowcharts, what is the purpose of the flowchart? You are not going to reproduce this flowchart. Institute is not going to give you marks for reproducing the flowchart. The flowchart is an aid to memory, right? So if you like this flowchart, remember it. No, sir, I want to use material. Please go and go do that. No problem. Okay. Got my point? I will also check up with the institute committee to find out what is the issue there. But please let's not waste our time on that activity. It's a non-value added activity, right? If you are happy with this, if you think there is something wrong here, you tell me what is wrong, I will correct myself. But if you think this logic is good enough, then let us go with this now. What do you say? Let us not waste our time. I'm wasting your time, even giving this comment. Many students waste their time like this, comparing material, book. They do proofreading for everybody. Why are you acquire the knowledge, run, clear the exam, go. Don't worry about all these small things. Don't sweat the small stuff. Go for the knowledge, acquire the knowledge, write the exam, clear, become a member. That is the goal. Okay. Once this clarity of goal is there, I've seen people become members. But this clarity of goal is not that simple. Sir, what is this, sir? What is that, sir? Why institute material like that, sir? Why Hindu it is told like this? Business line it is told like this. He's caught in the mess of current events. He or she doesn't have the vision long term. Okay, this is my humble view. Sometimes people used to be very angry with me also because I'm never concerned with current events. What's happening today, I'm not at all bothered. Because it's going to change. I'm more I'm worried about trends. What's happening? What's going to happen in the future? So that I can adapt myself for that. Okay. I won't run, which is one of the reasons why, my dear friends, I do not read newspapers. I never read newspapers. Not now. Right from the age of 15 years old, I have never read newspapers. Unnecessarily waste of half an hour time reading some nonsense that this fellow is giving you. Everything is having an angle. They want to cheat you. So better you don't do that. Okay. Now today, the time now is 8:36 by my watch. So I will go on till 8:50, right? Until 8:50 and try to complete as much as possible. Today, my target I couldn't meet. I don't know why. I wanted to complete up to 50th slide. So, right. And of course, some of the views I'm expressing are my views, not the views of the Institute of Chartered Accountants of India. For example, don't read newspaper is my view. If you want to read, read. But most of the time, newspapers contain only current. They keep on concentrating on so that you don't get the bigger picture. Rather, I read articles, I read magazines, which give me the bigger picture. That is more important for me as to what's happening. No break. We'll go till 8:50 and close. If still you want a break, what I suggest, you wear a headphone, go get yourself a cup of chai, come back. That's what I used to do. When I'm attending online classes, I'll use a headphone, I'll go and I'll still listen to my Guruji. I'll go, I will make myself a cup of tea, biscuits, come and again sit. Okay. So there, some of my astrology classes used to go 3 hours, 3.5 hours, you'll go 3 hours continuous. When one Bhava is being studied, 3 hours, you'll go continuously. So I cannot walk out. See, I am interested in learning, means I should sit down. Guruji is teaching. When he is teaching for 3.5 hours, can I not sit? Like that, I used to ask myself, and I will sit. So, offer for sale. You saw that now? I explained to you what is offer for sale, right? Okay. Exit option. Exit option means, see, what is the exit for him? He has already invested the money in the company. How to exit now? We will pay him money. The company will buy back his share, or other promoters or somebody will buy his shares. Okay. For that, the rules are prescribed, not in your syllabus, but they are entitled to get their money back. Not the original investment, because in the meantime, the valuation could have changed. So that will be decided by the tribunal. This will be a bigger issue, but dissenting shareholders are entitled to get their money back. That is the exit option. Because he is saying, look here, I gave the money for one purpose. You are now changing it. Sorry, give my money back, I'm going. If so, the money should be paid back. That is called exit option. Okay. Now offer for sale. See, this will happen along with an IPO. Any members of the company may, in consultation with the board of directors, offer their shares to the public. I'll give you 2 examples to understand. One, company started, became a public limited company. The promoters have continuously invested. Okay, now they go for a public issue. The promoters don't want to dilute their total ownership, so they want to reduce it to 40%, and 60% they want outsiders. But what they are saying is, entire 60% I won't give to the proposed issue. They want to have only 40%. So they are telling, and for the purpose of public issue, listing, it is enough if you have 20% outside shareholding. So they are saying, I will offer 40. New issue will have so much shares. At the end of the new public issue, my stake will come from current 80 to, it will come down to 60. Then I still want to reduce it to 40. No, another 20% I will give. My own share, I will sell it to the public. So along with the IPO, the promoter also will sell his shares to the public by offering. They will offer their shares to the public along with the IPO. Same valuation. Suppose the IPO is going at 350 per share. Offer for sale also will be at 350 per share. Sometimes, as somebody was pointing out, some high-level employees might have been given shares. They can also join the OFS. Any members, the word used here is any members. So long as you're a member, you can join. Many companies give this opportunity to their high-level, because when he joined, you wanted to retain him for 8 years. Therefore, what you said, please take my share, work for the company, make the company grow. Later on, when we go for IPO, we'll get a huge valuation. At that valuation, you can also sell along with us. This is how inside, that was the incentive you gave to him. He also worked like a donkey. He made the company perform. Now he will also join the OFS, offer for sale. Okay. So those members, so this is to be done in consultation with the board of directors. Those members who are so offering their shares shall authorize the company to take all actions in respect of the said OFS. So, the merchant banker will be doing both. The board of directors will appoint the merchant banker, and that merchant banker will be doing both IPO and OFS. Okay. Many public sector undertakings, when they come for a public issue, the government of India will go through OFS route. Okay. If you ask me some examples, I'm not able to remember OFS directly, but some I can give OFS. I think Tata Group came out with an OFS. I will check out and tell you. OFS is there. Nothing wrong in OFS, because at the same valuation, the promoter is selling his share to the public. But the document by which the offer is made should contain the same content as the prospectus. The expense for the OFS will be reimbursed by such members to the company. Whatever extra amount is spent for the OFS will have to be borne by the members who are making the OFS. Right? The document through which the OFS is made shall be deemed to be a prospectus. Don't confuse with deemed prospectus. That is different. This is different. This is where the promoters are also selling. Also, sometimes, I gave you the example now. There are people called PE funder. When they see a potential company, they will come in at a decent low valuation, they will acquire shares. So they will take a 20% stake in that company. Then they will even sit on the board. Professionally, they will advise the company, make the company perform well, then the company will go for IPO. So at that time, everybody gets an exit option. That is, they can sell the shares and they can work out. The PE fund will also sell at a premium. That is how he makes his money. See, he would have invested at what? 200 rupees, you would have allotted him with a premium. But now that when you go for the IPO, the valuation could be 700 rupees. So the difference money is return on investment. Okay, that is how the PE fund will operate. PE fund also will be a merchant banker only, Mama. See, again and again, these same fellows only come in different avatars. It's not as if new fellow will come. Same guys are running around. They have money. They keep doing it. All investment bankers, they'll come. PE fund. They are called PE funds. So, in fact, recently, Edelweiss Broking, they came out with this concept of investing in potential IPO companies like that. So, they went to SEBI, got an approval and said, if every person can invest minimum 25 lakhs in that scheme. So, once you invest 25 lakhs, that money will be pooled, and they will not invest in listed companies. They will invest in unlisted companies, but which are having good potential, which are going to go for listing within next 1 year. So, they will identify such companies, and they will invest in those companies. Then later on, when the company goes for IPO, this fund will go for a OFS, offer for sale, as a member. Then whatever profit they make, the value of the portfolio, my 25 lakhs will also get that profit, right? So my original investment of 25 lakhs will become 1 crore like that. Sometimes they give such records, but risk is also there. Suppose that company doesn't go for listing, or suppose the IPO bombs, loss. So risk is there, heavy risk is there. Okay. But these are all methods of funding. The document shall be deemed, and part 1 of chapter 3 shall apply to it. Means all the provisions relating to prospectus will apply, except provision for minimum subscription and minimum application value, which is there for IPO, will not be there for this. Minimum subscription is 90% of the issue amount should be received within a certain period. 90% of the issue. That condition will not apply to offer for sale. Okay. Because it's an offer for sale. Yeah? It's a contract. I'm offering, you are buying. Any other information which cannot be gathered by offeror with justification for non-compliance. So sometimes you may not be able to give certain information. You can say, sorry, I'm not able to give it. Reason also should be given. Name of persons bearing the cost of OFS to be disclosed. Who are the people who are going for the OFS? Beautiful. Now, if you have any doubt on OFS also, you can ask me. Now, section 40 says, once you go for a public issue, that security should be dealt with in a stock exchange. Means, if you are taking money from the public by issuing a prospectus, then you are... Oh, it is till 9:30, right? Sorry. Thank you. That is why I was wondering why this time is leading. That's absolutely correct. 7 to 9:30. Yeah, 9:30. What we will do, since Aradhana is wanting a break, even I need a biology break. Agreed? So let us have a small break now. The time is 8:50. The time is 8:50. Means 8:47. We'll go till 9 o'clock. We'll have a break. Then we'll go till 9:30, as usual. Okay. So I will also give you a break. Thank you for the correction, Pujaji. Thank you. I mean, totally forgot. Yes, sir. Welcome back from a break. I know I made it a little short, so because we need to cover topic. Therefore, one question has come out on offer for sale, which is interesting. How about other investors than promoters? See, the section on OFS uses the words any members, right? Sorry, any members. Which could be any member. There is no, it could be promoter, it can be non-promoter, it could be a PE fund, it could be anybody, it could be individual shareholder. But then this route is not for, see, if you are a small shareholder in that company, you might also be included in that offer for sale. Suppose you are an early investor in that company. When the promoter started the business, you invested. But remember, at this point in time, the company is not a listed company. It is an unlisted company. And it is going for an offer for sale. It's going for an IPO. Along with that, you're going. So, yeah, small shareholders, they by the company, the promoters will say, hey, we are all going to, the board of directors will send a letter. If the company is proposing to go for a public issue, in case you want to sell your shares in the offer for sale, indicate your willingness. We will include you also as one of the offer for sale category. You can, number of shares you want to give, you tell, you can take it. So it will be given. In fact, employees will be given this route only. Many employees who are holding shares can take this route and go. Many companies have done it. So the point you should know, technical point you should notice, the offer for sale is not restricted to promoters. The section uses the word any members. So since the word any members is used, it can be even small shareholders can, other investors than promoters like you can do this. But again, the company should give this opportunity. The company does not give, you cannot go directly to offer because it should be done only in consultation with the board. So what will generally happen is when the promoters are going for offer for sale, they will also say, hey, let's also give an opportunity to the rest. So employees, other shareholders, everybody will come in. You can, again, somebody may not want to sell their entire shares because they might have confidence in that company. But what he may want to do is, he may want to offload some portion, make a money and recover his investment. Then balance he will continue to keep in that company. It's your choice what you want to do. But the decision should be taken by the board, BOARD, board of directors. Because offer is made in consultation with the board. Okay. So these are all choices. No rule, but any means there's no restriction. You can. I hope I have clarified your doubt, Mr. Raish Agarwal. Okay. Now, as I already mentioned, the OFS is deemed to be a prospectus, so it should contain all the provisions relating to prospectus, including misstatement, apply to OFS also. Right? Now, this is another condition, section 40. See, why does a person invest in an IPO, initial public offer? Why? Because he or she hopes that, feels that this company, once it is listed, they'll be able to sell at any time. Okay. Also, they know that once it is listed on a stock exchange, it will be actively traded. And generally, if it's actively traded, the momentum will raise the price and all that. So their intention is that it should be listed. If listing is not done, then the whole point is lost. Right? Therefore, section 40 says, if you want to raise money through an IPO, the shares or securities which you are offering through the IPO should be dealt with on your stock exchange. So, application shall be made to one or more stock exchanges and permission obtained for the securities being dealt with therein before making public offer. So, you should apply to the stock exchange and they should say, yes, we are satisfied with your company. Once you go for IPO, we will list these shares. Only then you should go for public offer. And the prospectus shall state the name or names of the stock exchanges or exchange. See, in India today, just for your information, there are only two major stock exchanges. There are only two major stock exchanges. Actually, there are only two stock exchanges today. I'm sure you know what they are. The National Stock Exchange Limited, National Stock Exchange, and the Bombay Stock Exchange, BSE, very old, age-old institution. The rest of the stock exchanges, the regional stock exchanges are no more. The Madras Stock Exchange, the Vadodara Stock Exchange, the Ahmedabad Stock Exchange, all gone. Only two giants remain in the shake-up. It all happened when online trading started. Earlier, yes, NSE and BSE, absolutely correct. National Stock Exchange and the Bombay. It is not MSC, it is not Mumbai Stock Exchange, it's still called Bombay Stock Exchange. Maybe as a matter of, I don't know, Bombay Stock Exchange. Both are equally good. If you go to moneycontrol.com, you will find for any share, both the BSE and the MSE quotation will come. If it is quoted on, if it is listed on NSE, invariably almost all companies are listed on NSE, but some may not be on BSE, depends. Okay, because NSE active trading, heavy trading in NSE only, whereas BSE is an older stock exchange, which is why we have two indexes. One is called Nifty, the other is called Sensex. Sensex is older index. It is old, very old. 60s onwards it is there, Sensex. It is an average, the weighted average price of about, I don't know how many are there in BSE Sensex today, about 50 or 60 shares are taken, and they keep on changing this. It depends on the active volumes. If the volumes are very high, only then they will get into the Sensex. And they are put there, and it's based on daily volume of trade. Number of shares traded, it's very high. These fellows get into Sensex, and then the weighted average price of the shares traded becomes the Sensex number, which is 36,000, 40,000. That becomes a sort of an indicator of the market buoyancy. Whether the market is bullish or not, it depends on that. So, friends, I have a small, I didn't mention it, but I will like to mention it at this point in time in no uncertain terms. I got one comment here which is a little leaving a bad taste in the mouth. The person who made the comment, I'm sure she has some valid reasons for using such blunt language. She may be advised to use more polite language in future. Again, see, Srikanth is a teacher with 27 years of experience, more than 30 years. I come as a package. I'm not a mechanical robot teaching company law. I come as a package. If you like the package, if you enjoy the way I deliver these lectures, I'm happy. If not, I'm sorry. But the package involves comments also. I would like to give some practical inputs. So I really don't know when to stop and how to. So the way I conduct the lecture, I will talk other things also a little bit, because I feel that gives flavor to the lecture and also adds value to the student in a larger extent. More than 50, 60,000 students have attended my lectures in all the three institutes. Whenever I meet them, they say, we enjoyed your lecture, sir. Very nice people. So none of them have commented anything about, sir, you used to tell so many good things, sir, in the class. Many things we enjoyed like that. Only they have told. So certain blunt things are not in the spirit of learning, especially when addressed to a very, very senior professional who is age-wise very, very senior to that person. Sometimes you might want to remember the Guru Shishya Bhava. For me to tell what I want to tell. That is the package it comes to you. Like it or not. What to do, you tell me. I'm now 56 years old, 27th. So I have been teaching. I cannot change myself now because somebody wants me to change. Usefulness of the comment. Sorry, take it with the pinch of salt. For example, unless I tell you about stock exchanges and all, you may not understand the subject. Otherwise, it will be mechanical. Any donkey can come and teach that way. Just section boringly. If you want such a lecture, maybe Srikanth is not the faculty for you. Maybe there are better faculty who will come morning, they'll come, they'll only talk section, blah, 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 blah. Then they will go. Maybe you'll get more value from them. Asirvadam. But Srikanth is a package. He comes with all this. So please take the entire package. Believe me, many students, even yesterday, day before yesterday, I was in Ernakulam Junction. See, this is a useless comment, but I'm sharing it. I was in Ernakulam station when suddenly one gentleman came to me and said, "Sir, are you Srikanth?" Sir, yeah, I am. Sir, I'm working in Federal Bank. I was a student in ACS. So I asked him, "Have you finished ACS?" "No, sir, I am finished executive, but not." So I spoke for 5 minutes with him, told him, "Finish it, any support in it." This is the guru. This is the role of a guru. Simply explaining the subject, any professor from a college can do. You don't need Srikanth to do it. Okay? So any professor from a college, mechanically they'll come teach and go. For the sake of money, they will come and teach and go. Maybe you need like that only, I think. Mindsets are like that. Anyway. So kindly don't miss. This is a package. And again, Guru Sishya Bhava is there. Please. I have learned from so many great people. Never have I used blunt language with them. Never. Because the culture I grew up in, the Indian ethos, the Bharat ka, there is a kalachar of Bharat is we respect our teachers and give them some space to move around and talk. If you don't do that, then you are no more than throwing money and getting knowledge. You cannot get that. And that too, this is free. Okay. Anyway, I didn't want to comment about it. I didn't want to react to this comment. But I want to make a categorical statement that I will be giving additional information. Don't, please. If you don't like it, sorry. You report to me. Maybe they will change me. They'll bring another faculty. No issues. Madam, I've reached the stage in my life when I'm slowly retiring. Vanaprasth. I'm getting into Vanaprasth. Such a man you are talking to. Okay? And you are starting the life in your career. Okay? So imagine how many more seniors will come. How many more of them will waste your time, bore you. So, coming back to the topic. As I was telling you, there are 2 stock exchanges in the country. You can make an application in any one of them or both. What happened to these regional stock exchanges is a sad story. Because before electronic trading, which you are familiar with, in the 80s, you had floor trading, where the brokers used to actually go in the morning, stand for 4 hours. They will actually, like brinjal mandi, like vegetable mandi, sabji mandi, they will stand there and sell and buy. Reliance 400, Reliance 400, another fellow, Reliance 400, Reliance 420, Reliance 420. There will be a deal. They'll immediately exchange things. It was very nasty and very primitive. You people don't even know that. I have lived in that time also. In 80s, I used to buy and sell shares. Floor trading was there. My broker will go. In the evening, he'll come back. I'll go to the broker's office. All sorts of golmaal will happen. The entire day, the price range would be there. Now, whenever I buy, he will only give the higher range. Whenever I sell, he will only give the lower range. I asked my broker, come on, every day, how for me only, you're selling only at the high rate and buying only at the high rate and selling only at the low rate. He will laugh. No, Srikanth, don't like that. So all that is solved now. Today, electronic trading, you don't need a broker, except he will give you the direct trading option. So what happened when this electronic trading came, geography became history. So the regional stock exchanges, that local stock exchanges lost the meaning. They tried to come back through something called the Interconnected Stock Exchange of India, all of them connecting together and forming a third entity. But as in the case of India, nobody will agree. The minute somebody does something, another person will give a negative comment, everything will go. So that never happened, which leaves these 2 monoliths, 2 beautiful, huge structures standing, the National Stock Exchange and the Bombay Stock Exchange. And so your share, if you want to go for an IPO, you should make an application to one of them or both. And they should give permission. And you should state that in your prospectus. And the issue proceeds means whatever you are collecting from the public issue shall be retained in a separate bank account and shall be used only for adjustment against allotment, where the securities have been permitted to be dealt with stock exchanges specified in prospectus. Means what? Until the stock exchanges give you permission, you cannot allot. The money is to be kept separately. You cannot utilize the money, right? Till such time the securities have been permitted to be dealt with. See, they have given you permission. Once you go for the public issue, the shares are to be adjusted against allotment. In the meantime, that both the stock exchanges will announce that this stock will be traded on the stock exchange. Immediately, we will make the allotment. Then all the applicants, their DP account will be credited, and then trading will start. Almost matter of 24 hours, it will start. The minute the IPO is over, money is collected, stock exchanges are ready, chuck. You will find that the quotation starts. A new account will be opened for that stock, and the price will start moving. You can see that. LIC of India will now they'll start trading it anytime now. And you'll see LIC of India. When you go to NSE website, you can see all these shares, the price movements and all that. In case the allotment is not made for any reason, the entire issue proceeds should be repaid to the investor. You can't put a waiver in the application. See, in the application form, you cannot put a clause. I am aware that the company may or may not be listed. Even if it is not listed, I am happy to take the allotment. You cannot put that condition. Even if he signs it, it will be void. It cannot be enforced. If the company is not going for listing, if the company shares are not dealt with in a stock exchange, then allotment should not be made. Then the money should be repaid. So one of the important conditions for allotment is the permission to be traded on a stock exchange should be obtained. Right? In case you do not comply with this provision, there's a penalty, 5 lakhs to 50 lakhs. Means it could be anything, not applying for stock exchange. But one beauty is, if you go to SEBI, it will stop at SEBI, because SEBI will not allow you to go to registrar for registration unless you show them the proof that you have got a in-principle permission from the stock exchange. So that way there are a lot of checks and balances. But suppose you are not making the allotment and utilizing the funds. That's a violation of 40, right? So penalty is there, 5 lakhs to 50 lakhs. Fine, 50,000 to 3 lakhs for an officer. 5 lakhs to 50 lakhs for company. Earlier, they had provisions relating to imprisonment. But now that is removed. The punishment by way of imprisonment up to 1 year has been removed. Okay, clear? So officer being put in prison now. But in the 2020 amendment, across the act, they removed imprisonment. They made it a little less stringent. The law to be a little less stringent. So ABC Limited issued a prospectus in April 2020 for applied for listing of share in 2 recognized stock exchanges, and both of them have given permission in June 2020. Can the company proceed for allotment? Yeah, the only situation is, when was the permission obtained? That word before becomes very important. So ABC Limited issued in April, but the permission was given only in June. So at the time of issue of the prospectus, it was not obtained. Therefore, they cannot go for allotment. The money has to be refunded. This is the logic. But in reality, it will never happen there. For example, when they issued the prospectus in April, the SEBI itself would not have cleared it. SEBI, because SEBI, NSE, BSE, they are one very close-knit group. All of them are meant to protect the investor only. NSE and BSE do one more thing. They are profit-making bodies. SEBI is a government regulatory body, whereas NSE and BSE are profit-making bodies. They are commercial body. But also they have a role as a stock exchange. They have to control the market. So they have stock exchanges have certain duties under the Securities Contract Regulation Act. Okay. So in our example, see, the answer is no, because the prospectus was issued in April, whereas they have obtained permission only in June. So whereas today what we say it should be done before making the public offer. The permission should be obtained before making the public offer. Correct. Yeah, but you see, once you have issued the prospectus without mentioning the stock exchange, you cannot allot. You have to refund the money. To my knowledge, there is no way you can circumvent it and allot. Maximum what you can do is, you can go to SEBI and you can get it's very difficult. What you can't, I don't know, seriously, there's no way out. So better before making the public issue, you have to get yourself listed, or permission for listing should be obtained. Which means, that's what. So in the sequence of public issue order, first is get permission from stock exchanges for listing. Then only prepare the prospectus, mention the names of the stock exchanges. Right? Correct. Wonderful. Now we go on to underwriting. Already I mentioned to you about underwriting. See, underwriter is a person who is like an insurance. Okay. In case the issue is not fully subscribed, there is a shortfall, the underwriter will agree to take a certain portion of the shares. So underwriting can be full underwriting or it can be part underwriting. For example, if I am issuing 10 crore shares, underwriting can be only for 2 crores. Because I feel only, or you need not have, underwriting is not compulsory. If you are strong, bullish about your share, over subscription, then don't waste your money. Why pay him commission? But suppose you are having a doubt, because for later on you will find that if you want to make the allotment, then 90% of the issue should be received. Only then you can allot. Suppose you have got 80% undersubscribed, balance 20% not subscribed. You cannot make the allotment. You have to refund the money. To avoid that, what you can do, you can have underwriting. So that the remaining portion, unsubscribed portion, the underwriter will take it. Then you will make the allotment and you will proceed with the project. So suppose you have taken underwriting for 2 crores. Then on the 2 crores ka face value, on the 2 crores ka value, including premium, whatever value, you have to pay commission to the underwriter. Now, there is a limit, there is a cap on underwriting commission. That is, there is a limit on how much underwriting commission can be paid by a company, right? So that limit is for shares. You can pay up to 5% for shares of the price at which the shares are issued. Price means includes premium also. Means 10 rupees share issued for 250 rupees means 10 rupees face value, 240 rupees premium. You will pay commission on the price, that is 250, right? Either 5% or the rate authorized by the articles, whichever is less. Suppose your articles of association prescribing 3%, then your limit is 3. Suppose your articles are prescribing 6%, then you can only pay 5. It's either 5% or authorized by the articles, whichever is less. Same way for debentures. When you are making a public issue of debentures, you can go for underwriting. For that, you can pay commission at 2.5%. So these underwritings, in fact, many broking houses are also underwriters. The brokerages, they are also underwriters. They will act as underwriter. They will be underwriter. They will also take the brokerage. They will promote the issue because as an underwriter, he doesn't want to take that share. So he will promote it as a broker. As a broker, he will get broking commission. As an underwriter, to the extent of underwriting, he will get underwriting commission. Got it? In your accounting paper, I'm sure you are having calculation of devolvement and all that. It's a separate problem will be there in accounting, corporate accounting, you will find. Devolvement. When the shares are not fully subscribed and the underwriters have to take up their shares, it is called a devolvement. Devolvement. Okay. But he will get commission on the entire underwriting. Suppose he has underwritten 2 crore, he will get commission on 2 crore. Finally, devolvement may be 50 lakhs. He has to take that 50 lakh shares, pay the money. But many underwriters make double profit. You know how? First, he will get commission on the entire thing. Then some devolvement is there. He buy the share. He'll keep it keep it for 6 months, 9 months. Then he will sell it. Actually, they make profit there also because by then the market may require. Maybe at the time of public issue, the sentiment was bad. Subsequently, the market improved and this company also started going up. He got allotment at the issue price. Now, the allotment may be, the price in the market may go up by 10%, 20%. You may get profit also. Or sometimes you might have to sell at a loss. Chalo, no problem. Whatever loss he makes, he will adjust against the commission because he will be underwriting, say, 10 issues. Out of that, development will be there only for 2 issues. So the commission he earns from 10, he will adjust the loss on that. If at all that share, it will still be making good money. So underwriting commission is one of the important income stream for merchant bankers who will have an underwriting division, right? Similar to insurance. In fact, in insurance companies, you have a person called underwriter. Underwriter will be there, whose job is to assess the risk and fix the premium. That is the job of the underwriter. For a fire insurance premium, motor insurance premium, underwriter will assess the risk and fix the premium. Correct. If, as you rightly say, you are the first time you are going for IPO, you are a new company, market is not aware. Don't take a risk. Go for underwriting for security purpose. Correct. So, I hope I have explained what is underwriting now. Were you not listening, Mr. Mageshwaran? Where I am going for a public issue, I feel that my issue may not be fully subscribed. Therefore, to protect myself as an insurance, I enter into a contract with some brokers who agree to take shares in case there is a undersubscription. The gap will be filled by these underwriters. For that, I have to pay him commission on the amount of shares he has underwritten. So suppose the issue size is 10 crore, fully underwritten. Then 10 crore fully underwritten. Then 10 crore into the price of the share into 2%, 3%, you have to pay commission. But suppose the issue is made and 10 crore shares are not subscribed, only 7 crore subscribed, then the 3 crore will have to be taken up. The shares have to be purchased by the underwriters by paying the full money. Then I will go ahead with the allotment. I will go on with my life. The underwriter will be holding the shares. It is called devolvement. Okay. So, you have asked the question, what is underwriting, sir? And I have explained what is underwriting. If you have understood it, kindly confirm that you have understood. Okay. So, it's like an insurance. But if the issue is fully subscribed, oversubscribed, then the entire underwriting commission is profit. Correct, 10 crore into 2. Usually, no company will pay 5% and all. They will bargain. They will try to reduce it. But upper limit is 5% or rate authorized by the articles, whichever is less. For debentures, it's 2.5%. Okay. In the prospectus of the name of the owners and also the commission to be paid, etc. Disclosure should be there. No commission shall be paid if it is not offered to public. For example, if there is a promoter's contribution coming in on that which is not offered to the public, there is no commission to be paid. No underwriting, no commission. Okay, no commission. The copy of the contract for payment of commission should be delivered to the registrar along with prospectus. It becomes a public document. Okay. Now we go on to allotment of shares. We already saw that the prospectus is not an offer. It is only an invitation to make an offer. Right? It is an invitation to treat. The application made by the subscriber for share is the offer. Now the allotment by the board of directors is the acceptance. With that, the contract is completed. Now, when the offer is made, the offer is accepted, contract. Right? So, membership of a company is basically a contract. You are applying, making an offer, he is allotting, accepting the offer, contract. The memorandum is a contract. Do you remember? We studied that. Memorandum is a contract between the company and its members, members and the company, and the members interstate. How do I enter into the contract? By making an offer called application. How the acceptance? By allotment. That is the primary market. Later, when I am the owner of the share, right? I will sell the share now. So my contract with the company is coming to an end. A new contract is entered into between the buyer of the share and the company. Got it? That is why Later on, when we come to share capital, you will see transfer of shares. Shares are movable property. Movable property can be transferred by mere transfer of possession. Ownership in movable property is transferred by mere transfer of possession. Then why should I file information of transfer and all that? Why I should file an instrument of transfer? That is not meant for the transfer. Under the Sale of Goods Act, the minute I give possession, the minute it comes to a DP account, you are the owner. Sale over. But there is a contract between the company and me, right? That contract has come to an end. And now you are the buyer. Now you are going to enter into a new contract, right? Therefore, to become a member, you have to apply in writing. That is that instrument of transfer, where the transferor informs the company that I am no longer, my contract is over. And sorry, the transferee now applies in writing. In that form, he will say, kindly register my name as the owner of these shares. Thereby, he applies in writing. When the transfer is registered, contract completed. For secondary market, for after the public issue. When the shares are issued for the first time, the application is the offer, the allotment is the acceptance. This was laid down in a very old British case, Ramsgate Victoria Hotel versus Montefiore, where they said, Montefiore said, I applied. So you offered through prospectus. I applied. You have to allot. They said, sorry, no. The court said, when the company issued the prospectus, it is only an invitation to treat. When Montefiore made the application, he made the offer. Directors refused to allot. Offer was not accepted. So no, Montefiore cannot get the share. This was the decision in Ramsgate Victoria Hotel. But in a public issue, the shares will be allotted. For that, there are certain conditions. We will see these conditions and close. 9:25. We will see these conditions, very, very important. Minimum subscription. Currently, 90% of the issue size. Means if I'm making an issue of 10 crores, 9 crores should be subscribed. Should be minimum subscription to be received within 30 days of issue of prospectus. 30 days time is given. But if you see any prospectus you see now, maximum they'll give you 7 days, 15 days, because they are extremely confident that the money will come. So the minute the IPO, see LIC, the minute the IPO goes, oversubscribed. So if Reliance goes, it depends on the company. If they go for a public issue, in a buoyant market, positive market, any public issue will be immediately subscribed because there's a huge appetite for new shares. Every Tom, Dick and Harry donkey wants to own a share. So any issue they'll come. And Economic Times will give write-up also. So these will buy. So Tobacco Limited also will buy. So normally they won't give 30, but maximum limit is 30 days. The minimum subscription should be received within 30 days. And the amount specified as application money shall not be less than 5% of the nominal amount. If the face value of the share, nominal amount, face value is 10 rupees, minimum application money should be 2 rupees. The application money shall not be less than 5% of the nominal amount. These two conditions are prescribed in section 39. Okay. Today, in reality, this is never done. Only recent example of partly paid shares is Reliance. 2020, they came out with a fresh rights issue. That rights issue, they issued partly paid shares. Today, any public issue, the entire amount will be paid at the time of application itself. The entire amount. I'm yet to see any public issue where application money is, in your typical accountancy problem on share capital, they will say the application money 2 rupees, on allotment 3 rupees, call, first call, second call. Nothing. In reality, never. In reality, public issue, entire amount to be paid at the time of application, including premium. Right? So, the only rare example of a partly paid share issue was Reliance. More about it when we come to rights issue and share capital. Rarely you will find. But the rule is the application money can be less than the face value, but it should not be less than 5% of the nominal amount. Right? Once the allotment is made, you have to file a return of allotment in form PAS3. Prospectus and Allotment of Securities. PAS3. You should file it with the registrar. Very important. Okay. where shares are allotted for consideration other than cash, the copy of the relevant contract also should be attached. See, at the time of public issue, we might be offering shares to the public. We might also be allotting shares to promoters for consideration other than cash. We may be allotting for consideration other than cash. Means the promoter may be giving some intellectual property right, or he may be giving land for which we won't pay cash, money. Instead, we are allotting him shares at the same price. Then that copy of the relevant contract with the promoter should be attached. Hello. I thought I could go up to 50 slides, but now the time is running out. No problem. We'll complete this slide and we'll start. Allotment of securities, the minimum amount to be subscribed. We already saw that. 90% of the issue size to be. Application money has been paid and received by the company. The application money shall not be less than 5% or such other percentage as specified by SEBI. The minimum amount, if it is not subscribed within 30 days and the application money is not received, then within 30 days from the date of issue of prospectus or such other period specified by SEBI, the amount received shall be refunded. I'm sorry. Suppose the minimum subscription is not received within 30 days or such other period as may be specified by SEBI. Okay, 30 days. But SEBI has the power to prescribe longer period or shorter period. Whatever it is, if the application money is not received within 30 days or such other period, then the amount received shall be refunded within 15 days from the closure of the issue. Right? So, you are opening the issue on 5th June. Issue is open for 7 days. 5, 6, 7, 8, 9, 10, 11. 11th midnight issue closes. Then, 30 days from 5th June, count 30 days, it may come to 4th. Your money should be received, 90% should be received. If it is not received, then you have to refund the money within 15 days from the closure of issue. This is the rule. Because the numbers don't gel, right? So there seems to be a slight problem here. Anyway, if you have any problem in issue, one good thing is that you can go to SEBI and solve it. SEBI has the power to relax or think. So, the idea is the issue should be open for 15 days so that when the issue closes on the 15th day, you have another 15 days from the date of opening to close. Suppose your issue is only for 7 days, you will be in trouble. What to do? You have to go to SEBI and get permission, etc. Okay. Now, thank you, Mr. Magesan. See, the idea is this is not a physical class. See, in a physical class, I can see the body language of the student. Sometimes, in my physical class, some student, after I explain once more, they will still nod their head, but I know he has not understood. I will go to him and again explain to him. This is possible in a physical class. But in an online class, I cannot see your faces. So that is why I'm asking people to confirm that they have understood. So hitherto means from then onwards. Once you get married, you'll be married. You'll be happy hitherto. That means from now onwards, from then onwards, you will be happy. Okay. So today, I think we have done good job. We have come. Thank you for your good words, kind words, because whatever hurt I had is been satisfied by the good words you got. But then I'm still immature. I'm still reacting to what somebody is saying. So I have to refine myself and become above all this so that good or bad I should go. But still, nothing wrong. The comment was good, but I want to make it clear that extra information will be provided in the class. That is package deal. Take it or leave it is your option. In FPO and OFS, there might be chances of company will not go for underwriting. See, OFS, there is no underwriting. Offer for sale, no need. FPO, if you want, you can go for underwriting. FPO also, you can go for underwriting. It is not, because in further public offer also, there might be. But these conditions and all are not there. Minimum subscription. But still, you can go for underwriting if you want. But normally, as you say, FPO, rarely they will go for underwriting. If they want, they can go. Because as you know, they are matured company. They know what their potential is. Actually, I don't have any examples of that. Usually what they will do, the promoters will bring in the money. So whatever is the shortfall, the promoter, I've never had a case where the money was refunded. What they will do, they will bring in the money from their own sources. Either underwriting will be there or the promoter will fill up the short gap and they will go for they will go for allotment. They will go for allotment rather than avoid, because they have spent so much money now for the public issue. So they will do something. They will go to some people, borrow money and all. I've seen promoters do it. And such companies rarely do well. Okay, is the point. But unfortunately, the investors who have invested in such companies. Okay, so to answer your question, no, the company has refunded the money. Instead, what the promoter will do, he will bring in the short gap, allot the shares. Okay. He should get it within 30 days from date of issue, and if that is not received within 30 days, within 15 days of closure, he has to repay the money. Okay. Thank you very much for your patient listening. Next class is on 31st evening. Then we will complete this topic. Okay. Thank you very much, and wishing you all a great weekend. Enjoy yourself. Sir, class over, sir. Sir, class over, sir.